Good afternoon and welcome to this week's edition of Halftime Talk. We're honored to be joined today by Mr. Robin Mills, the CEO of Qamar Energy. Robin, thank you for joining us.
Yeah, good afternoon, Sean. Afternoon, everyone.
Robin, it's clearly a week in which we were expecting at this stage of the week to have a clear outlook for where international OPEC oil policy was going for 2021. It still looks a little bit cloudy. What's your own analysis simply on the fact that OPEC and OPEC Plus have stumbled their way to finding consensus?
Yes, it looked perhaps as of a week ago, we weren't expecting so much drama around this meeting. Seemed that the stars are pretty well aligned for a plan for OPEC Plus, how to go forward. This latest dispute, or at least uncertainty, disagreements has come out, somewhat unexpectedly. But perhaps, looking at the kind of underlying factors, we could have. In retrospect, perhaps anticipated it wouldn't be quite as smooth as we expected. Obviously the consensus had become that OPEC would meet and would agree to delay the implementation of scaling back their cuts and possibly through the whole of the first quarter of 2021. Now some differences of opinion have emerged on that, of course, and particularly those centering on the UAE.
I mean, regardless of where this goes now in terms of this immediate decision, there's still 16 months left in this OPEC plus. 23 countries have signed on to an agreement on curtailing supply through to April 2022. What does the difficulty this week tell you about the journey that they still have to come?
Yeah, I mean, this journey was always going to be a difficult one, right? Because you're talking about the end, then by April 2021, suddenly the deal comes to an end. And in principle, if everybody was still sticking to it, then 5.8 million barrels per day suddenly come back on the market. OPEC was not going to dump 5.8 million barrels per day on the market in a single month. So I think it was clear that there would have to be a transition. Either the cuts would have to be phased down gradually through 2021 and into 22, so that by April of the following year, then there wouldn't be any cuts, so they'd be kind of back to normal. Or there would have to be a further extension beyond April 22 if the market still wasn't strong enough, if inventories hadn't been drawn down, and 5.8 million of cuts would become 4 million, 3 million, and eventually be phased out that way. And that is a long time to wait in a pretty rigid structure, given all the uncertainties, and given that you have the members' relative positions are changing. And I think that's a big part of the tensions that we're seeing now. You've got some countries whose production and whose capacity is growing and who want to use that, and the UAE very much stands out because the UAE has made some very large and credible commitments to growing its production capacity, and
more to come.
And more to come. So it already has 4 million barrels per day of capacity, and it's not usual for the UAE to have so much unused. And of course, it wants to hit 5 million by 2030. It's pretty disappointing to try to make progress towards 5 million of capacity when you can't even use more than 3 at the moment. Then you've got Iraq, which has a lot of spare capacity too, and has severe economic problems and very much wants to produce more. And you've had the tensions over Russia, of course, which is kind of pretty much complied, but not quite. The Russians always squeeze out a little bit of extra advantage. But then you've got other countries coming back. Libya has very much come back in a big way. Will that last? We don't know, but that is more than 1 million barrels a day that wasn't factored in even 2 months ago.
Certainly real at the moment, right? So it's how long it lasts, but ultimately it's very real today. 1 point whatever million coming out of Libya.
Yeah, absolutely. So out of the 2 million of proposed oil that was going to come back, half of that's already been spoken for. And then you've got well before April 22, we'll have the question of Iran. If a Biden administration re-enters negotiations or eases back on sanctions a bit, at least some Iranian oil probably could come back on the market by April 22, and then that's yet another factor, another growing producer, not within the deal, of course, but still an OPEC member.
A lot of the reporting this week, and it started even last week ahead of this OPEC meeting, is divergence between the UAE position and Saudi Arabia. Do you buy into that? What's your own thoughts on it? If indeed it is true, it would be a little bit unprecedented that there would be much daylight between those two. How do you interpret that?
Yes, I mean, it's interesting, first of all, to see the UAE being so assertive. The UAE has generally been quite prepared to work closely with Saudi Arabia and also Kuwait to form a kind of Gulf trio, which have closely aligned opinions. But the UAE now has been more assertive, in a couple of ways. Obviously, one is just in wanting to, as we understand, wanting to ease back on the cuts a bit more rapidly, and has proposed a kind of a compromise solution where the cuts would be phased down gradually during the first quarter instead of held at the current levels. But also, we've seen this leak, or this perhaps tactical leak of the idea that UAE had studied leaving OPEC, just as an idea, just a speculation, keeping the options open, but a negotiating point, just to kind of warn the other OPEC members that they couldn't necessarily count on the UAE indefinitely. And also saw the announcements of ADNOC's very large spending plan, announcements of 22 billion barrels of unconventional resources added to reserves. And so I think, again, a signal. Okay, I mean, these numbers are no doubt real numbers and are technically backed up, but it's also a signal to say, yes, we can keep increasing production capacity if we want to. We have the resources. And meanwhile, on the other side, you have the Saudis. So if you recall back in the brief price war back in March, the Saudis told Saudi Aramco said they'd been ordered to increase production capacity from 12 to 13 million barrels per day. That's been reaffirmed subsequently, but hasn't been much more said about it. So you got Saudi, relatively fixed capacity, and then you got the UAE wanting to grow pretty significantly and to make the most of that opportunity.
Let's just take a slightly bigger picture view, Robin. We're now obviously 6-9 months into a phenomenally disruptive economic downturn globally. It is I don't know, is it the second time in a decade that we are using language like the worst since the Great Depression? And in between those two moments, we had the oil price collapse in 2014-15. I'm just wanted to get your perspective when you assemble that 10-year period. I'm wondering what are the lasting legacy impacts, do you think, on the Middle East oil producers from those very big disruptions? Can business continue as usual, or are we going to see some significant changes?
Yeah, I mean, look, that is a fascinating question, Sean, and a tricky one. I mean, obviously, very much where you look, some countries in the Middle East have just simply not been able to cope with these stresses and have fallen apart entirely, or have certainly got into severe economic and political crises. And Iraq is one obvious example of that. On the other hand, it's perhaps surprising. You mentioned three pretty earth-shattering events from a Middle East oil producer's point of view. And yet, in many of the Gulf countries, businesses, almost as usual, almost as normal. Fundamental strategies and structures of the economy have not changed that much. But I think it's clear that things are going to have to change much more rapidly over the next decade. These three crises should have made it clear that this whole path was this whole path of development of the economies and the continuing reliance on oil and gas was unsustainable. And behind all of this, never mind the economic and pandemic crises, but behind all of this, obviously, is the longer term climate picture. I've really seen a dramatic acceleration in climate policy since 2019, 2020. We've now got zero carbon targets by 2050 or 60, covering most of the major world economies. Many corporations, including oil companies like BP, committing to zero carbon by certain dates. And that even if the world economy was doing great, that is still obviously a huge challenge to future oil and gas demand.
I mean, we have seen in Saudi Arabia in recent years, obviously the emerging reign of Mohammed bin Salman and very significant economic reforms, and with that, in recent months, the austerity of VAT to 15%. We've seen the talk of income tax in Oman. We've had some significant reforms also here in the UAE. When you put all of those different pieces together, would you expect more of that given these shifts, these changes?
Yeah, I mean, look, we shouldn't expect miracles within a year or within 5 years. The economy takes an enormous time to shift onto a different path, and the things you mentioned are very significant. I think it's just there hasn't really been time for the full impact of these to play out. The UAE measures, business-friendly measures, very very positive, but of course have only just been announced. So, we'll take a few years to see new businesses really taking advantage and springing up. But some of these measures, take introducing VAT. It's an important measure, revenue raising measure. It's a one-off, but the fundamental work of structural economic reform and developing skills and developing new industries and new exports, that is not something that can be created by a single government decision. That again, you look at East Asia in the 60s and 70s. I mean, again, it's a work of decades to develop new economic sectors like that. And meanwhile, of course, the oil and gas sector still remains the key part of the economy and the key source of government revenues.
I mean, given that point, ultimately coming out now of 2020, a significant hit on government revenues again in 2020. And as we saw in the 2015 price crash, and we saw 5 years earlier with the global crash, the ability for these economies to continue to be sort of government-led spending trickle down do you think going forward into 21 and we will see a greater initiative towards private enterprise towards that will move away from this top-down model, or are we just not ready?
Yeah, look, I think there's always kind of a paradox here, right? So people talk about economic diversification and getting away from oil, but they're really talking about three different things. Now, first one is diversifying GDP. The Gulf has actually done that pretty well. GDP has come down from back in the 70s, 70, 80% of it was oil. Now it's even in a place like Kuwait, it's 50%. In the UAE, it's much lower. So that's been to a fair extent achieved. The second issue is government revenues. Government revenues still overwhelmingly from oil, but that is changing. We're seeing VAT, as you mentioned, possibly other taxes. So the governments are trying to diversify their sources of revenues, and that's again enjoyed some success, although only partial. And in the other hand, if you take Saudi Arabia, for example, government spending in other areas has increased. So social spending and so on. So a lot of those extra revenues have then been recycled back into the economy. And then the third issue, which is the difficult one, is diversifying exports. And exports still remain overwhelmingly oil and gas, and a few other derived products like petrochemicals, aluminium, and so on. Now, that is the really tricky one. How do you get up the value chain and produce more sophisticated things, manufactured products, services, exports, that genuinely diversify the export mix?
I mean, however you get there, it strikes me that somehow you got to get there, and maybe times like this do offer opportunities for more dramatic reforms that otherwise are more difficult to introduce. But the other legacy outcome of the last decade, Robin, and I don't know if 1 and 1 is 2 here, but certainly it feels like we're getting closer to the time, and here we are arguing this week within OPEC about when we should increase production and maintain price. I think we're getting closer to the time when it has to be low-cost producer produces as much as they can, and the price falls wherever it may. I'm wondering what your outlook for that is going forward, and the logic behind it.
Yes, and look, I think the UAE again has kind of taken the lead on this, and that has become the realization that at the current rate, by 2050, when so many economies are meant to be zero carbon, there will be decades worth of oil and gas left in the ground in the major Gulf oil producers, if they don't change their policy. Now, that's not to say that necessarily their policy should be to produce every last barrel, but still, it doesn't seem to make sense to strand so much low-cost oil when a lot of high-cost oil is still coming out of the US and Canada and other places. So indeed, there has to be a bit of a shift of policy there towards a more aggressive monetization of resources. The UAE has made that path clear. Saudi, not so much. They did talk about increasing capacity to an extent. They may do so, but they're still far short of plans which they had in past years for 15 million barrels per day plus. And then you've got Iraq, which is in a bit of a different situation, but again, Iraq still very much underproducing its enormous resource base. So there has to be indeed a shift towards a more aggressive policy on that. And some other OPEC producers with lower reserves or higher production costs, if you think of in Algeria, for example, they're not in that position, and they're not going to be very happy with that shift in policy to a kind of high volume, lower price policy. But there's not too much they can do to influence that. Their voice in the organization is not what it was.
I mean, if you take that same point and bring it more to the immediate sense of 2021 and the return of the now 7.7 million barrels of OPEC plus production, or sorry, OPEC plus production that is off the market, how to return that, and whether one should be only guided by maximizing price, or does OPEC need to consider the strategy that is not just about maximizing price and about market share as they look at that 7.7 million barrels that's still off the market?
Sure. Look, and I think there has been analysis that suggests that in the kind of medium long term, OPEC's best strategy in an uncertain market is to try to at least maintain its market share, not to try and go for the higher price at the cost of permanent loss of market share. And this is a tricky one because we've seen in recent weeks the oil price responding and improving significantly, and you could say, well, that means it's fine to bring oil back on the market at the start of 2021 to knock off this 2 million barrels per day of cuts. But of course, part of the price response is because the market thinks that OPEC will hold back on the production increase. If OPEC had made it very clear it was going ahead with relaxing cuts, the price wouldn't have risen so much. Because yes, vaccines are on the way. Very promising. UK will start rolling out vaccines this month, but we know it will take a long time to vaccinate hundreds of millions of people, and well into next year. Probably the whole year there'll be a mass vaccination campaign in many countries, and life will not return to our kind of pre-2020 normal for a significant period. And so the boost in demand that we're expecting is going to come in, perhaps the middle or end of 2021, not the start. And meanwhile, we have a very serious pandemic wave in the US and parts of Europe, which is going to be leading to further lockdowns and further demand losses. So, I've advocated consistently that OPEC should be quite aggressive on bringing back production and recapturing market share, but not at any cost. And I did quite like what we understand was the UAE's proposal to say, let's not bring the 2 million back, all of it back on 1st of Jan 21, but let's put 500,000 back in the market each month. And that's, I think, quite flexible. This is a very uncertain, fast-moving situation, and doing things monthly rather than quarterly it gives a better chance of adjusting to that. Not overdoing it, but also not holding too much oil off the market. Because again, conversely, OPEC doesn't want to swamp the market, also doesn't want to starve it and have prices shoot up and have US shale start coming back and then have another further cramp world demand just at the point it seemed it might be recovering.
When you look at that decision that they're making and will continue to make in the coming year, it obviously is an OPEC plus framework, the 23 countries as in total, but ultimately some big players in there. I mean, what is your outlook for that as an entity? Does OPEC still exist, or is this all OPEC plus? The rumors that UAE may look to leave OPEC, but could still be a member of OPEC plus, which seems not a crazy idea. I'm just wondering your own thoughts of those two things coexisting. Are they separate, or are they permanently now intertwined?
Yeah, so I think there's a challenge there in terms of the role of OPEC plus. But also I don't want to overstate this, because look, back in March, April, OPEC plus was in a desperate situation. Price war between Russia and Saudi Arabia. Trump having to tweet at people to cut production. Texas getting involved. So we shouldn't forget just how bad that crisis was. We shouldn't forget how bad the crisis was that led to the establishment of OPEC Plus in the first place, and all of the difficult negotiations around that. This I see, for now, more of a tactical dispute. There isn't a disagreement that large cuts are still required for a considerable period going on, through 2021, likely into 2022. Just a question of how quickly that those cuts are phased down. Now, there's some discontent, I think, with Russia. Russia's been overproducing. It's been the biggest overproducer in barrels, apart from Iraq. On the other hand, percentage-wise, it's not that much, given Russia's large production. So you could, maybe cut the Russians a bit of slack on that, and know that they will always push the envelope a little bit on their cuts. And I think, overall, the OPEC Plus framework has proved pretty successful in achieving what was desired from it, which was restraining production amongst a bigger group of countries, and particularly Russia, some of the other OPEC Plus.
But given that point, is it not more credible or is it not more important to maintain the credibility of this group, and so move ahead with the 2 million barrel a day increase, whether it be incremental over Q1 or all in one go or whatever it might be, but ultimately to not do so inevitably results in more slippage, and the credibility then of the body becomes jeopardized?
Well, I think, one aspect of the OPEC Plus arrangement this year that has worked actually very well is the catch-up cuts, the compensation cuts. Used to be that countries would under-comply and then would say, oh, sorry, we'll do better next month, and then, of course, never really catch up. Now, the idea that, okay, you produced 1 million barrels too much last month, well, you've got to make that up this month on top of your existing cuts. That has introduced a greater discipline. We saw the UAE did make up. It overproduced in the summer. It made that up in the autumn. It was perhaps a bit was verbally criticised for having overproduced, but it made it up. Iraq, to a very limited extent, but a little bit. Iraq has made up some of its cuts as well. So that is a new disciplinary measure that we never saw from OPEC before. And that I think under these unusual circumstances of very deep cuts, that has worked to instill greater discipline. But the whole OPEC Plus framework, I think, is obviously a question: how long does the discipline hold together as the market improves? How do you manage the reallocation of quotas when over the next year, 2 years, the UAE, maybe Iraq, will say, look, we can produce more, we deserve a higher quota, you should take that off the share of somebody else who can't or doesn't want to produce more. And then the long-term question of OPEC Plus, and you raise this as the survival of it as an arrangement or an organization, is its idea to manage supply indefinitely, or should it be doing something else? Should it be a framework for adjusting to higher levels of production and helping to support members through a transition to a very different oil market, much greater competition, perhaps declining long-term demand? And I think, if you take the UAE position, I'm not sure that it makes sense to be in OPEC Plus and not in OPEC. I mean, OPEC is a very well-established organization. We know, celebrated its 60th birthday recently. Strong research organizational team, a brand name. It's a bit much to give all that up and still be an OPEC Plus, which is still kind of nebulous. But would still commit you to cut production, so you kind of get all of the unpleasant side of being OPEC without the pleasant and the useful side. And I think the UAE, about the influence, and the UAE has become undoubtedly more influential in recent years within OPEC. And has really taken a seat at the top table alongside, Saudi, which is always a key arbiter of the body, and other traditional members like Iran and Venezuela have their influence has very much faded away.
And as they have done also geopolitically in the region, stepped up to the top table. Let's just wrap up, Robin, with that. And the question, the big, obviously, change in the new year is a new administration in Washington. The previous or the current still administration, the Trump administration, were a very important part of putting Humpty Dumpty back together again in March, April, when OPEC, non-OPEC seemed to fracture and threaten the U.S. energy industry as a result, because the price crashed so low. But that now is going away, that idea that you have an American leadership that is keen for higher prices, that is keen for the oil industry to be very, very prominent and strong, to an administration that may be going back to what is the normal American government posture, which is lower prices are better for our economy.
Yeah, I mean, there's a kind of weird contradictory impulses here, because Trump always was crowing about lower prices and saving motorists costs, but then he was also, of course, wanting to bump up prices to save his buddies in Texas. And the Biden administration will have the contradictory impulses the other way around. They'll they'll want the higher prices to encourage their environmental agenda, and to make other non-oil sources of energy more competitive. But conversely, they don't want to be throwing gifts to the oil industry, particularly. I'm not sure they will be as anti-oil and gas as as the US oil and gas industry thinks they will, but they're not going to be wholeheartedly supportive either. And of course, we know that the policies that they will pursue, they'll, again, to a degree, they will restrict oil and gas production. Probably not to the extent that some people worry about, but that will, on the whole, tend to push US production a bit lower, and therefore prices a bit higher. So that there are always these contradictory tensions, and obviously this matters to a big extent in US domestic politics. Even though from the outside we look at the US as an entity in itself, but the state level politics are very important.
And we might see them having to re-engage in this region as a result. If their own domestic production was to decline, then we talk about Venezuela and Iran, two huge oil reserves that are currently underproducing, that might be an incentive for a more Pax Americana to go out and ensure that there is more oil flowing from different countries.
Yeah, it could be. I think if there's a dramatic collapse in US oil and gas production, I think the US government, whoever it is, will do something about that. I think the economic and the political gift of having such high production and not being so worried about imports is not something that's going to be easily given away, even by a pretty pro-environmental administration. But I think even in a world of declining demand, that doesn't mean that geopolitics goes away, and perhaps in some extent it comes to the fore even more, because we're going to get cycles of overinvestment and underinvestment, as we always have, even if demand is kind of stagnant or falling. And what's going on in Venezuela, Russia, Iran, Libya is going to be very influential on that market. Perhaps even more influential if there isn't enough investment by the traditional Western IFCs around the world, and so the prominence of Middle Eastern producers is increasing again.
So let's just wrap up where we started, Robin, and put you on the spot. How do you think this week is going to end up with the OPEC plus?
Well, I think ultimately there will be an agreement, and I think perhaps this is a bit more than a storm in a teacup, but I mean, we shouldn't over-exaggerate it. There's always differences of opinion, tactical differences. So as I say, I think there will be an agreement. Now, whether it is to hold back on the production increases through the whole first quarter, or whether it's to phase them down, I think those are the most likely outcomes. I don't think we're going to dump the cuts. I mean, I don't think we're going to get the 2 million coming back on the market all immediately on January the 1st. I think the market is still.
And I think the market could accept a phased increase. I don't think it would. It might ease off the prices a bit, but I don't think we'd see a dump down to $30 or anything.
No, 500,000 a month, that's fine. And then if a certain month isn't looking good, then again the increase can be delayed. It's what I like about the flexibility of that approach in such an uncertain market. And if we see vaccines doing great and people are flying again and stuff, okay, you can bring the oil back on the market a bit quicker.
Well, I do expect we're going to see a lot of visitors coming into Dubai this Christmas season, so that might be the beginning of the post-vaccine world. Robin Mills, CEO of Qamar Energy, thank you very much for being on Halftime Talk this week.
Sure. Thank you, Sean.